all these things are happening all at once, and they're all happening so rapidly, you can't afford to just go into your own little hut with your own little tribe and just hunker down, because then you're going to get left behind. So many people right now are using AI to do so much more work in the same amount of time, or do the same amount of work in less amount of time. That is a productivity game changer. In a world of constant stimuli, constant push notifications, constant reminders of how your portfolio is doing, can you do that? If yes, you are a rare bird, you are a gem, you are a diamond in the rough, and be a buy and hold investor and you're going to do great. If no, don't kick yourself over it, because 99% of people would not be able to do that.
Hello and welcome to Being Exponential with Luke Lango, where we'll discuss the economy, markets, technology, and lifestyle, all from an exponential perspective. I'm your host, Brooke. It's May 20th, and let's dive right in. All right, Luke, go ahead and tell us what this podcast is going to be all about.
Yeah, Brooke, thanks for the intro. Thanks for getting us started here. Listen, I've been in the investment game and the stock market analysis game for a long time now, over 10 years. And through those 10 years, as a lot of people can attest, it's been a pretty volatile, pretty crazy 10 years, pretty unprecedented, I would say. You're supposed to get a bear market about once every 5 or 6 years, but we got one in 2018, late 2018. We got the COVID crash, of course. We got 2022, and then we just basically had one here in early 25. So we've had 4 bear markets essentially in 6 years, and they've all been very different. One was Fed induced, one was lockdown induced, one was inflation induced, one was trade war induced. So there's been a lot of things that have happened in the markets over the last 10 years and really over the last 6 to 7 years. And I think what that, has kind of illustrated to me, or emphasized to me rather, is what's really important, what really matters. There's a lot of chaos, there's a lot of change, there's a lot of noise. What's the signal? What truly matters in markets? Because through all of this noise, the real signal has been that stocks have generally moved higher, and tech stocks, in particular now AI stocks, have been absolutely mind-boggling winners, right? That's the signal. The noise is everything else. The signal is the result of these stocks going significantly higher. Why? What's driving that? And it led me to this core belief that, with that observation, led me to this core belief that exponential technological progress, this idea that technology continues to not just progress exponentially, get better exponentially, but the adoption curves for that technology are also growing exponentially. So technology getting exponentially better and being adopted exponentially faster. That is the core driver of value in the economy these days. And it has a ripple effect throughout, the markets, throughout the economy, and even throughout our own lifestyles. If you think about what we were doing 10 years ago versus what we're doing right now, it's exponentially different. It really is. 10 years ago, iPhones were semi-ubiquitous, but not truly like fully ubiquitous. Now, 10 years later, we're actually at a point where the new trend is abstinence, right? Like getting rid of your iPhone, because they're everywhere. They're so much ingrained in our lives, so dominating, that now some people want to get rid of them altogether and find the next generation of tech hardware that's going to improve our lives. So it's just a lot has changed in 10 years, and it's all being driven, in my view, by exponential technological progress. That's the signal. Everything else is the noise. So this podcast is going to be dedicated to identifying the various exponential technological trends that are reshaping our society and understanding how to harness them to, essentially further ourselves, whether that's professionally, whether that's through great investments in the stock market, or whether that's through that just understanding the economy better, or even using devices in our lives, exponential tech products in our lives, to make ourselves more efficient, more productive, to save time, to give us time back, whatever it may be. That's what this podcast is all about, because I truly think that a lot of people out there are linear thinkers. They think the world progresses linearly, and it has for a long time. But in the past 10 years, it has increasingly progressed exponentially. And you got to adopt an exponential thinking mindset to succeed in this new paradigm in this new era. So that's what this podcast is all about. And we're going to dive into those trends and how they're reshaping every facet of our lives and how to harness them to further ourselves for our own benefit. Because that's the difference between tomorrow's haves and have-nots. Those who do harness exponential power, those who do become exponential thinkers, and those who do not. So that's the elevator pitch. That's why we're here. That's why I think folks should pay attention. I think it's really important, arguably the most important stuff out there right now. Really excited to get this podcast started this week and keep it going, hopefully, for a long time.
Yeah, that sounds great, man. I'm all for it. Even as a layman, it's interesting. You can see it even if you're not paying attention. I always like to think of hard drives and USBs. I remember 10 years ago, you see maybe like a 50 gigabyte one, and you're like, wow, that's a lot of data. Now we're sitting around with terabyte ones. It's nuts. 2 terabyte hard drives. It's crazy stuff, man. So I gotta thank you, Luke, for keeping everybody informed. And I want to keep this going for as long as possible too. But just to stay on topic, let's start moving on to the economy. The thing that's at top of mind for me, and I'm sure for everybody that's listening right now, is tariffs. It's the major buzzword. It keeps popping up over and over. I know a lot of people don't even know what a tariff is. So if you can just express why that's important and what it means to us and how we can think about tariffs as exponential thinkers and what we can do in this market, Luke.
Yeah, tariffs. Tariffs are a great place to start because that has been the word of the year on Wall Street, right? Tariffs are why we dropped 20% in February, March, and into early April. And tariffs are also why we rallied in the back half of April and here into May, about 20% again. So it's a double-edged sword. Tariffs are a double-edged sword, and we've seen both sides of the sword. So your first question, what is a tariff? Well, a tariff is a tax of import. Something comes in this country, it gets taxed. That's what a tariff is. 20% gets taxed, 20%. Price if it goes up 20%. Okay, cool. Makes sense. Tariffs were a huge part of the U.S. economic model back when the U.S. was founded. Throughout the 1700s and 1800s, we actually didn't have income taxes in this country. All the revenues from the government were collected through tariffs, and that's because the U.S. back in the day was not what the U.S. is today, right? The U.S. was once the little pipsqueak in the world. It was not always the global economic and military superpower. And when it was the little pipsqueak, it needed to put up barriers to protect itself. If we didn't have tariffs back in the 1700s and 1800s, we didn't have manufacturing capacity. So Europe, who did have manufacturing capacity, could have flooded us with all these cheap goods, and no American manufacturers would have been able to compete at all. So we needed tariffs to keep that stuff out so we could build our own domestic manufacturing capacity. Okay, makes sense. So tariffs are a huge part of the model, but the tariff system started to break down in the late 1800s, early 1900s, because what it did is basically tariffs are a regressive tax, okay? If it's a 20% tariff, it's a 20% tariff. Everybody pays 20%, which means the lower income people pay 20% and the upper income people pay 20%. So it's regressive in that nature. And then also when you have a tariff model, again, it was established so that we could build domestic manufacturing capacity. But once that manufacturing capacity was already built, the tariffs were just overly protecting the big companies in the U.S. They didn't have foreign competition, so they could act as monopolies in here. This was the era of the J.P. Morgans and the Rockefellers and the big oil barons. They became so large because of tariffs. Tariffs essentially got rid of foreign competition. No one domestically could compete with them, so they just became these massive monopolies. So you had a real divide between the haves and have-nots. You had this huge wealth gap forming. You had the regressive tax, and then you had a series of financial crises as a result of all that throughout the 1880s, 1890s, and the early 1900s. And so eventually, America said enough is enough, and they changed the model. They went from tariffs to income taxes, and they went from having no Federal Reserve Bank, central bank, to having a central bank, the Federal Reserve. So 1913 is when the modern U.S. economic system was born. Since then, it's been pretty steady. Tariffs have gone down, taxes have stayed largely the same, and the world has become increasingly globalized. Okay. Well, here in 2025, there is a push to kind of go back a little bit towards the pre-1913 model, where we have tariffs in there, less income taxes, and more domestic manufacturing. Fair. There are great arguments to be made to push for those things. There is a way, if you do it delicately enough, if you do it strategically enough, gradually enough, to put in new tariffs, reduce income taxes, and create a better economy. I buy that argument. But you got to do it the right way. The problem with the tariff picture so far in early 2025 is that the first attempt at doing that, at bringing tariffs back into the economy, was not the right way. It was a sledgehammer that we did not need. We need little screwdrivers, and we don't need a sledgehammer. Trump brought a sledgehammer on April 2nd. Those tariff rates were massive. They were nonsensical. They were completely out of context and they weren't reciprocal at all, like at all. They were reciprocal times a billion. And so the markets crashed. There was the worry that global trade would freeze up. There was the worry that the economy would spill into a global recession, like '08 or even worse. So yeah, there were a lot of fears, and that's why we crashed. But while they did show up to the party with the sledgehammer, and who does that? That's weird. To their credit, the Trump team has walked a lot of that back, if not all of it, right? They said this is the high point, we're going to negotiate down, and they've done that. They really have done that. They've negotiated tariff rates down pretty much all across the globe. They've issued pauses, exemptions. They've signed a trade deal with the UK, a trade truce with China. And the result of all that is that the average effective U.S. tariff rate after Liberation Day, it was 30%. Now it's pretty much all the way back down to 10%. So looks like it's going to be okay because a 10% tariff is completely manageable. So a lot of people are still worried about tariffs and their impact on the economy and the markets and all that. I think we've seen it. I think we've seen the impact. We got the whiplash down. We got the whiplash back. Now we're back to a manageable level. If we can stay here, and I think we will stay here because I think the White House wants to shift their focus to tax cuts now as opposed to trade war, then I think we're past the worst of the trade stuff. Now, you had a question about how does this look through the lens of an exponential thinker? Well, I was never really all that worried about tariffs because I don't think they work in an exponential world. They just don't, right? In the linear progress world of the 1700s and 1800s, tariffs work because when things aren't changing that much, you can be insular, you can be isolated, you can kind of just have your own community, your own tribe, and that's that. But in the world we are in today, where our AI models are progressing super rapidly, and China's AI models are as well. And then Europe's got some good things going on. And then India's got this whole manufacturing boom because manufacturing is coming out of China and going to India. When all these things are happening all at once and they're all happening so rapidly, you can't afford to just go into your own little hut with your own little tribe and just hunker down. Because then you're going to get left behind, right? The longer you do that, the more the rest of the world is going to beat you. So you can't do that. You got to stay globalized. And that is the exponential mindset, the exponential thinking outlook on the tariff regime. They do not work in a world that is super connected and changing so rapidly because of the exponential technological progress. So from that reason, I think, we kind of learned the lesson. We got the tariff whiplash down and back up. And I think we're past it. I really do think we're past it. And I think we can focus on other things in the market and the other things in the economy that are going to drive higher value going forward.
Awesome. Yeah, that's pretty in depth. I appreciate that, Luke. Now, when it comes to tariffs, one thing that kind of goes hand in hand with that is price hikes. If you can dig into price hikes, companies like Temu, Shein, the foreign companies that a lot of Americans buy into, how did that affect us? Does it kind of flow into inflation? Is that something we should be worried about? Maybe like the ripple effects of the tariffs that we saw and things that are happening right now. Can you touch on that?
Yeah, that's a great question. That was the big fear right after we got those massive tariffs on April 2nd was, oh my God, the price and everything's going to go up by a billion jillion %. And that didn't happen. In fact, inflation has been very steady and flat. I think we were at 2.4% CPI inflation in March before the tariffs. We fell to 2.3 in April. So they actually went down after the tariffs. And then here in May, I think real-time estimates are running at 2.4. Same with PCE, same with core CPI, core PC, all the major inflation readings. They've been pretty much flat March, April, May. Okay. So we haven't seen meaningful reinflation. That's despite the fact that, yes, some companies are hiking prices. Now, why is that? Because there's deflation elsewhere. The biggest thing here is oil. Okay, the price of oil filters into the rest of the economy. As much as we want to think we are not an economy built on the back of oil, a global economy built on the back of oil, we are. So if oil prices go up, then transportation prices go up, delivery costs go up, shipping costs go up, freight expenses go up, et cetera, et cetera, et cetera. If they go down, all that stuff goes down. Oil prices have been going down for a variety of reasons. There were worries that the trade war was going to cause an economic slowdown. OPEC Plus has decided to pump out a bunch of oil because Apparently, they're tired of protecting price. Now they're going to attack price and price out all their competitors. So there are a lot of factors working against oil, and that's really helpful for the inflation front because it's allowed inflation to stay stable at 2.4, 2.3, 2.4% amidst, what is the biggest tariff barrage since the 1930s. That's good. Now, longer term, we can't count on oil prices to keep going lower, right? I mean, eventually they're going to find a floor and then rebound. Okay, makes sense, especially if the trade war stuff resolves. But longer term, I really don't think we have to worry about inflation because exponential thinking here, right? Exponential technological progress has tentacles that flow into improved productivity, especially when we're talking about AI, okay? So many people right now are using AI to do so much more work in the same amount of time or do the same amount of work in less amount of time. That is a productivity game changer. And we're just getting started. We're getting into agentic AI, we're getting into physical AI. All of these things, I think, are going to completely rewrite the rules of labor, of how we work, and they're going to dramatically increase productivity and dramatically improve per unit of input. The amount of output we get is going to increase exponentially. If you work an hour back in 2015 and you got X output, today, if you work an hour with AI, you're going to get X plus X times 2, X times 3 output. Okay, you're going to get a 2X, 3X multiplier on your output per unit of input time. That is a productivity game changer. Supply demand. If we can increase the supply of goods and services in the world while keeping demand at a pretty steady level, that's deflationary. At least that's disinflationary. That's not going to cause runaway inflation. So I think, again, exponential thinking mindset, we don't really have to worry about inflation all that much. I don't get why the inflationistas are all worked up. I really do think that because, short term, we're getting helped out by oil, but medium, longer term, exponential technological progress, especially in artificial intelligence, the productivity unlocked there, that's going to offset most, if not all, inflation pressures going forward, in my view, in the long enough time horizon.
Incredible. I want to piggyback off of something you mentioned at the end there about the infusion of AI into the job market. Now, big fear that a lot of people I know, just a general sentiment, is that there's a apocalypse of sorts, an AI job apocalypse, where AI gets into the job market and a ton of people will get fired because they become unnecessary. Can you speak on that? Is that something we should be worried about? And you mentioned one person using AI becomes so much more productive. How will that affect, the average citizen or just a general worker?
Yeah, I mean the long overdue, much feared AI jobs apocalypse, right? It's not going to happen. It's not going to happen. What's going to happen is an AI jobs restructuring. The
Right.
skill sets. Now, I want to be clear. Just because I said it's not going to happen doesn't mean we're not going to have massive pain in the labor market. I think we are going to have massive short-term pain in the labor market as we transition from the pre-AI era to the post-AI era. Because pre-AI era, what made you a valuable worker? Really technical skills. In the last 10 to 20 years, what made you about technical skills? The ability to code, the ability to software engineering, the ability to put things together, mechanical engineering, the ability to create financial models, investment analysis, or an accountant, or whatever it may be, the ability to read a legal case like an attorney and be really good at dissecting, loopholes around it, or defending your client, or prosecuting, whatever it may be, right? It was really technical skills that defined value in the labor market over the last 10 to 20 years. You can take those skills and throw them out the freaking window in the post-AI era. Because that's not the competitive differentiation anymore. The competitive differentiation in the post-AI era is creativity. It's creative thinking. How well can you creatively instruct various AI models to do something? Because AI can code. Right now, AI can code. And that's why there's this whole term out there called vibe coding now. Before, it was all about coding. Like, the best coders are the ones that had the best technical skills. That's not true anymore. The whole industry of vibe coding is about, okay, we don't code anymore. What we do is we naturally explain to various AI models what we want to code, and then it'll code it for us, and it'll do the actual work. So the coding legwork is now done by AI. This is now, by the way, this is not like some hypothetical future I'm talking about. This is right now. GitHub Copilot, all this, there are a lot of platforms out there that do the coding for you. ChatGPT even, okay? So the competitive differentiation in the coding industry already has changed from he or she who can code the best to he or she who can instruct an AI to code the most efficiently and create the best end product. Prompt engineering is another way of looking at it, but I like the term vibe coding. And I think that's a microcosm of what's going to happen with the rest of work. So right now, this is causing a huge pain point in the software industry because people that were really good at coding may not succeed in this new world because they actually really aren't creative thinkers and don't know how to instruct the AI agents. Meanwhile, those that weren't that good at coding before might become new winners in this new world because they are very creative thinkers and are really good at prompt engineering and telling an AI agent or giving an AI agent or various AI agents instructions to complete a task, a coding task. That's a microcosm of what's going to happen to the rest of the labor market over the next 5 to 10 years in rolling fashion, industry after industry, both physical industries and digital industries, software and hardware. AI is coming. AI models, AI devices are going to be able to do labor, skilled labor, manual labor in a manner better than humans. And so the competitive differentiation is not going to be I know the most about this skill or this craft, but rather I know the most about how to tell an AI to do this skill or this craft the most efficiently and deliver the best outcome. Complete restructuring. Doesn't mean there's going to be job loss on an overall basis, but a lot of job transitioning. And I think it's a huge thing. And I have 2 kids under 5. Math, science, huge believer in those things. But I want them to be creative thinkers. I want them to not just know that 2 + 2 = 4, but understand why. Because that is going to enable them to instruct a model, which can do 2 + 2 = 4, even the most complex math equations out there, and instruct it to do more than what it is programmed to do. So that's what I think is going on with an exponential kind of thinking outlook on the labor market as it relates to this AI jobs apocalypse. It's not an apocalypse. It's a restructuring, but it's a very important restructuring that could hurt a lot of people, but also benefit a lot of people.
Gotcha. Yeah, that is an interesting take. I guess we don't know what we don't know, and that kind of applies to how the job market will shape out. And I'm sure we're going to be touching on that subject more and more because this is probably the worst AI is going to be, right? So it is going to be a fascinating future. Just to keep the conversation moving along, I want to touch on the markets at large. We mentioned the tariffs and how they kind of oscillated the markets. It's been a crazy 2025. We've had a ton of up and downs. It almost feels like Groundhog Day when you're looking at the news. It's like, oh, bear market almost. Oh, bear market almost. Can you touch base on that? Maybe reassure some of our viewers, or at least give them more details on how we should feel about the swings in the markets that we've seen as of late.
They're just the new norm. And like obviously the trade war is to blame for what's happened here in 2025, but in 2022 it was the inflation crash, right? That was to blame, inflation, runaway inflation, and then in 2020 it was a global economic lockdown and a global pandemic, and then in 2018 it was kind of tariffs, mostly Fed induced. We had that flash crash in late 2018. And then in 2015-16, it was a commodity crisis. So, I mean, the culprit's always different, right? We can blame inflation. We can blame the commodity crisis. We can blame COVID. We can blame a trade war, whatever, blame the Fed. But the fact of the matter is that they keep happening. These crashes and these recovery rallies keep happening. And I think that's just a byproduct of the world we live in. 20, 30, 40 years ago, tech did not drive the market. But not like tech stocks didn't drive the market, but tech functions themselves didn't drive the market. You didn't have high frequency trading. You didn't have these big market makers. You didn't have these liquidity suppliers. You didn't have all of these massively leveraged, derivative trades that could, explode at any single moment. That wasn't a huge thing 10, 20, 30, 40 years ago. And now it is everything. That is the market. The market is high frequency. The market is algorithms. The market is massively leverage driven plays. Not to mention access to the market's been completely democratized because of technology. Back in the day, if you wanted to trade, you had to know a stockbroker. You had to get on the phone. You had to call your stockbroker. You had to place a trade. Yeah, I mean, like, there were a lot of steps. There were a lot of barriers to entry to trading stocks back in 1960. Now, I got Robinhood. I got all these different things, right? I got all these apps on my phone. We got cryptos. I got Coinbase, right? Like, or even SoFi does cryptos now too, right? So it's like, it's so easy. And so everybody does it. There's so much money in there now. And it's just like, okay, now this money's not, I'm not going to call it dumb money. I think that's a really offensive term, but it's not that super disciplined hedge fund money, you know? It's just mom and pop throwing money in the market. Yeah, so it's going to move. It's going to get afraid when things go down, and it's going to get FOMO when things recover. So you are going to continue, because of technology, democratizing access to the markets and changing the market, the underlying market dynamics themselves. Because of that, what we've seen in these last several years, that's just the new norm. That's just it. You're going to get big crashes. You're going to get big recovery rallies. They're going to happen more and more often, more and more frequently. And as a result of that, you got to understand, okay, there's opportunities. The volatility creates opportunities. If you bought this dip in April, oh my Lord. I mean, so many stocks have rallied so much off that April 8th low in the market. We've had dozens of stocks go up 100% or more off that April 8th low. Volatility creates opportunities. So yes, it's kind of scary. Again, double-edged sword, right? Like the tariffs, double-edged sword here. A lot of volatility, scary. Any moment stocks could crash. But also opens the door for big recovery rallies, big buy the dip opportunities. And I think, you got to just be aware of that. Always have cash on the sidelines, always ready to deploy it. Never get too long as the stocks are going up. Really just kind of be a buy the dip type person, then get really long on a big drawdown. And then ease exposure as, kind of get back into rally mode. So that's kind of how I'm looking at things in terms of exponential, trends influencing the markets and investment strategies as well.
Gotcha. So it's almost safe to say it's the new normal. The probably the average investor can't do the Buffett technique where you buy and then you hold for decades. You kind of have to look at the markets on a monthly almost basis.
Yeah, I mean, I think buy and hold still works. I'm still a big believer in buy and hold. I definitely have embraced more trading strategies in the last few years because of this new reality. I think they're going to work better, but buy and hold still work. The one big asterisk, massive asterisk there, is buy and hold works if you truly put it in a coffee can on the shelf, right? Coffee can investing. You buy something, you put it in a coffee can on the shelf, and you check in on it 10 years later, and you don't care what happened in the interim of those 10 years. No one's like that these days because we're so democratized. Again, like I get push notifications every time a stock's up or down 5%. Every minute of every day I'm getting a push notification. A stock's doing this, a stock's doing that. If you get all that stimuli hitting your brain, you're not going to, that's not a coffee can. That's every time you open your front door, it's the first thing you see. And if you see that rotting, I mean, NVIDIA, for example, great example. That stock has absolutely soared in the last 5, 6, 7 years. I mean, thousands of percent gains. If you bought it in 2017 and held it all the way to the day, boom, rechissimo. I mean, you made tons of money. But guess what? You also had to deal with 3 or 4 separate drawdowns of 50% or more, which means that in order to truly realize the massive gain that NVIDIA stock has offered to investors in the last 5, 6, 7, 8 years, you had to be able to stomach 3 different drawdowns of your investment value going down 50% or more. Can you do that? In a world of constant stimuli, constant push notifications, constant reminders of how your portfolio is doing, can you do that? If yes, you are a rare bird, you are a gem, you are a diamond in the rough, and be a buy and hold investor and you're going to do great. If no, Don't kick yourself over it because 99% of people would not be able to do that. And that's why trading strategies for a lot of people actually do work better in this new environment. But I don't stand on the door and buy and hold. I think it's still a great strategy for the right person who can stomach that, short-term volatility.
Gotcha. So, yeah, got to have nerves of steel for that buy and hold. We're talking about trading, we're talking about the markets going up and down, but I'd like to bring up a contrary point almost. We got the Moody downgrade this week, and it almost seems like the markets didn't react at all to that, even though we've had all these gyrations. Can you expand on that? Like why do you think that happened?
You see that? The big yawn? Yeah,
Yeah.
that's what the Moody's downgrade was. It was a big yawn and nothing burger. It doesn't matter at all. I mean, I don't care what a ratings agency says about the rating of U.S. debt. I know what U.S. debt is. It's the best and safest investment in the world. Okay,
Mm.
it's backed by the most productive, most durable, most resilient economic engine the world has ever seen, which itself is backed by the most insanely innovative and highest growth companies the world has ever seen. Nvidia, Apple, Amazon, Meta, Netflix, they all pay taxes to Uncle Sam, okay? And as long as they continue to keep on paying taxes to Uncle Sam, I'm not going to worry about U.S. debt. There's the debt ceiling, the deficit, I'm not worried about that because it's backed by productivity. Debt is only a problem if you don't have growth to offset it. Guess what? We got the growth to offset it, and we have more growth coming. You heard of AI? Yeah, all those companies are the leader in AI. AI is American made. It's America first. I'm really not worried about the debt stuff. So Moody's downgrades, okay, cool. Welcome to the party. They showed up to the party fashionably late. Stale chips. They brought stale chips to the party. No one's eating them. Why? Because S&P already did this downgrade back in 2011. Fitch did it in 2023. Moody's did it now. Okay, so all three are on the same page. Cool story, bro. Let's move on. Big yawn, big nothing burger. Yes, we live in volatile markets where things do change very quickly, but even then, the market can collectively realize when something is a yawn, is a snooze fest. That's what the Moody's downgrade was. Snooze fest. Move on. Next.
Gotcha. All right. In the spirit of moving on, I want to start touching base on exponential tech. Now, we mentioned earlier that as much as technology is advanced, our market is still kind of based on oil. And last week, Trump went to the Middle East. And then when we saw that, there was a flurry, a bunch of deals between Middle Eastern investors and AI companies based here. Now, how can we, as exponential thinkers, look into that? What does that mean for us?
Yeah, I think the market really, I mean, it did react positively, but I don't think positively enough to all those deals. Big oil is becoming big AI. That's what I keep saying. I think that's what's going on here. Those folks over there in the Middle East, they have really, 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 really deep pockets. I mean, the Saudi Arabia Public Investment Fund has, I think, about 900 billion to $1 trillion in assets. Call it $1 trillion in assets. Abu Dhabi, United Arab Emirates, the Abu Dhabi Investment Authority has also about $1 trillion in assets. I think the Qatar Investment Authority has about $500 billion. I think Kuwait's got about $1 trillion. You start adding all this up, and the money under management over there, the assets under management in Middle Eastern sovereign wealth funds, we're talking $4 to $5 trillion. That's massive. That is the entire U.S. economy is like 22, $23 trillion. So we're talking a huge deal here, not just a drop in the ocean, but massive, massive amount of money, a lot of liquidity. Okay, they always knew the oil well is going to run dry. The world is running on oil today. It has for a long time, and well for the future, but not forever. Oil money's going to run dry. So they're looking for the next bet. And that's what you're supposed to do. You're not supposed to change when you're at the bottom. You're supposed to change when you're at the top to stay on the top, right? That's how progress is rewarded. You get rewarded when you're the king and you keep making changes to stay the king. Well, they're the king right now. And they know that if they want to stay the king, they got to keep making changes while they have all this money. Okay, they got $4 trillion, $5 trillion. What are they going to put it into? Not more oil. They try to do electric vehicles. Didn't really work out. They tried to do, I don't know if you heard about this line. It's called the Line, the city in Saudi Arabia. Um, I don't know what drugs they were taking when they thought of that. But that's not it. That's definitely not it. What is it is AI. I mean, AI is unequivocally it, undeniably it. And so now big oil is realizing that they're becoming big AI. They're taking their $4 or $5 trillion in assets under management and saying, all right, pour it into AI. And what
Right.
that means is a lot more money, a lot more demand for NVIDIA AI chips, AMD AI chips, Taiwan Semiconductor, Veritiv. They provide the cooling solutions for these data centers. It just means a bunch more money into the whole AI infrastructure boom, which then itself means more money to build AI applications and deploy those AI applications. I mean, all that did really is give a huge shot in the arm to the whole AI boom. So I think it's massive news. I think it's definitely a sign that the AI boom is not even close to over, but rather we're still in the middle of this ball game. I think we're at halftime. I think we're about to go into the second half. I think it's going to be a really good second half. And yeah, I'm just really bullish on all those deals that were announced because again, they have so much money. They have long time horizons. They're going to keep pumping money in, and that's going to mean continued tailwinds for all these AI stocks. Again, AMD, Nvidia, Broadcom, Veritiv. I think these are just companies that are going to continue to benefit from massive AI infrastructure spending.
Gotcha. Wow, yeah. So they're actively not being the blockbuster in this context, which is, I mean, obviously the smart thing to do, right?
I actually really love that you brought that up because that beyond big oil, that's what's happening everywhere. Okay.
Right.
The big tech companies of today, how did they become the big companies of today? Because their predecessors fell asleep at the wheel. Their predecessors got complacent.
Mm.
Netflix became Netflix because Blockbuster got lazy. There's that famous story, right? Of Blockbuster could have bought out Netflix and said, nah, bro, we're cool.
Oof.
Blockbuster got lazy. Blockbuster got lazy, incompetent, and stupid. And guess what? Netflix took their spot, and now they are the entertainment behemoth of the world. What about Meta, right? Like Facebook, everyone thought, oh, just a college app, social networking, dumb stuff, right? Like, not going to work out. And guess what? They replaced every single form of kind of news dissemination, and all these news outlets now are really struggling. And people get their news from Facebook and Instagram and TikTok too, I guess. That's where people get their news, right? And so, like, they became who they are because their predecessors got lazy. Amazon, another great example. Sears, lazy. These companies, Kmart, lazy. Walmart, to their credit, was lazy and then did not get lazy and adapted and is now succeeding. But
Yeah.
Amazon came in where others got lazy. They succeeded where others got lazy. So these companies realize they damn well know they are where they are because their predecessors fell asleep at the wheel. So they themselves are not. And that's why everyone's like, oh my gosh, they're spending all this money on AI. They're overspending. There's going to be no ROI. All these complaints. Like, shh, they're smarter than you. They really are. They're the biggest, most powerful companies in the world with the best engineers and the brightest minds. They know they stay on top by spending too much. They want to spend too much. They don't care about the short term ROI. They care about establishing long term, indestructible competitive modes. And that's what they're doing by creating foundational AI models. And that's why this AI boom has a lot of legs. Big oil, big tech, all these companies, to your point, they understand they got to keep spending to stay on top. And that's exactly what they're going to do. Because if they don't, some small startups that have come out of nowhere and replace all of them. They don't want that to happen. Facebook does not want to get Facebooked. Netflix does not want to get Netflixed, right? So they are staying on top of the game by spending a bunch of money. That gives me huge confidence in the whole AI trade.
Gotcha. Yeah. You definitely don't want to get Netflixed. In the spirit of moving on from oil, I know you're a big self-driving bull. I've seen you in a Waymo. That was a pretty cool video, just the car driving itself. So I'd love for you to touch on how self-driving cars are doing in the market. What are we not seeing that you've seen?
Yeah, so self-driving cars are, I mean, they're huge and they're everywhere. They run Phoenix. They literally run Phoenix. Like you can't go on any run of any sort, like an errand run, going out to the grocery
Right.
store or going to dinner or whatever, and not see a Waymo. They're everywhere. I would say my average trip, my average driving trip in Phoenix would include seeing 5 to 7 Waymos on average, right? They're everywhere here. Um, and that this is just the start. They're going to be everywhere in every city over the next probably, I'd say probably by the end of 2027, so a year and a half. I think they're going to be probably in every major metro in America, servicing thousands of rides per week in all of these metros. So we're at the beginning stages of hockey
Mhm.
stick type growth with Waymo. Meanwhile, Tesla is launching their robo-taxi service in Austin, I believe next month in June. It's still on track. It's always been the date, and there haven't been any delays there, although Musk is infamous for promising early and delivering late. I do think that they are launching next month. So that's big. And then also in Texas, the self-driving startup Aurora, one of my favorite picks in the whole self-driving space, ticker's AUR. They launched their self-driving trucks for the first time, commercial self-driving trucks. I think on a route between Houston and Dallas, I believe is what it is. And they plan on scaling to tens of trucks by the end of the year and then scaling beyond thereafter. So that company's really going full steam ahead. So when you look at the way I look at self-driving is there's the robo-taxi service networks that Waymo's doing. There's selling you a self-driving car. Tesla's trying to do that. And then there's self-driving trucks. Aurora's doing that. All three heads of this monster are progressing forward very rapidly. And so I think there's a huge opportunity here. I really do. Uber is kind of a connective tissue, if you will, in the space. I think Uber, that stock has flown to 52-week highs. I think it keeps going because as it turns out, logistics is actually a moat. Like it actually is. Like it's tough for Waymo to get a logistics network of ride sharing up and running in every new city. Like that's tough. So what do? They go to a new city and they just plug into Uber's network. Which makes a lot of sense because it takes so much money to make these Waymos, right? And so you want to get ROI on them. You want to get utilization out of them. What's the best way to utilize an asset in the ride sharing world? We'll plug it immediately into the busiest ride sharing network out there. So Uber is kind of a play here that I think is connective tissue that works really well. Like I said, Aurora is another stock that I like a lot in the space, more of a pure play. I think the Waymo piece of Alphabet is way undervalued. I know Alphabet has a lot of risks as it relates to ChatGPT. In fact, I don't even use Google search anymore. I do ChatGPT for everything. So that is a huge existential risk to the Google business model. But Waymo, I think, could almost entirely offset that, if not more than offset any market share erosion from search loss, because that's going to be a huge business, folks. I mean, that's going to be massive. And so I think that's really underappreciated in Google stock, which I think is trading at less than 20 times forward earnings. So I think there's a lot of opportunity in the self-driving space. I think we're at the beginning stages of really exponential growth in the industry. And I think a lot of these stocks are some really good plays for the next, 12 months to 36 months.
Gotcha. You know, that thing you mentioned about plugging into the logistics of Waymo, plugging into the logistics of Uber, it kind of reminded me of something you said earlier about there being AI appliers and AI builders, right?
Mhm.
Can you talk about these two baskets of stocks? What, is still good to buy? Which ones to buy? And do you think that AI boom still is strong, something that we should as viewers be jumping into right now?
Yeah, right. I mean, yeah, thanks for bringing that up because that's how we look at the AI revolution. Like, I mean, the biggest question we get is, how do you invest in AI? Like, what AI stocks are there? Well, in order to really simplify things down, because there are so many out there. I mean, trust me,
Right.
every Tom, Dick, and Sally is trying to become an AI company these days. So don't get fooled. What you want to do is we've filtered it down into two baskets. You have the AI builders and the AI appliers. The names say it all. The builders
Right.
are the ones building the infrastructure necessary to support the AI boom. So in order for an AI application to actually run and be effective, it needs a lot of compute. It needs data centers. Those data centers require a lot of components. You need chips for them. Making those chips require a lot of equipment and components and whatnot. You need energy to power all of this stuff, right? So there's a huge ecosystem around just building the infrastructure necessary to support the creation of AI applications, to support the training of AI models. That's the AI builders basket. So we kind of talked about NVIDIA, AMD, Broadcom, TSMC. Those are some headline builders, great long-term investments in AI, supported by all this big tech spending, big oil getting into the game, just a big, AI infrastructure boom. And then you kind of look further down, you look at semiconductor equipment makers like ASML, right? They make those lithography machines, which are essential to making really advanced semiconductor chips. So ASML becomes a great builder stock. You look at something like Veritip, you mentioned that name before. They provide cooling equipment for data centers because, as it turns out, you put all this compute into this giant data center. Guess what? That building's going to run as hell, like Phoenix hot. Okay, so you got to put some. I live in Phoenix, for those that don't know, and it's already 100 degrees here in May, so that's wonderful. Love that I moved here. In any event, those data centers, they run hot. They run hot. See, you got to put fans in them, and not just your old school little, Walmart fan. You got to put in real heavy duty data center specific cooling solutions. And that's what Veritip supplies. So they're really interesting in the space. Recent Networks, another big player here. These are companies that are in the supply chain of semiconductors, of AI construction, that are going to continue to benefit from massive AI spending, infrastructure spending, tailwinds. And this even goes down to, again, like I said, the energy suppliers. Companies like Constellation Energy, ticker CEG, Vistra, ticker VST. These are companies that they were boring old utility companies. Now they're exciting, cool new utility companies that are creating these nuclear reactors or restarting nuclear reactors and tapping into more natural gas and just getting a huge energy boom from supplying energy to these data centers. Because again, these require a ton of energy to actually operate, and you got to tap the utility guys to get more infrastructure, more capacity to build. They have to supply the power for those data centers. So those become AI builder stocks in their own right. So those are the builders. Now the appliers are the ones that, okay, infrastructure is built. Why are we building all this infrastructure again? To create these new AI applications that we can then deploy throughout the world and transform the way we learn, play, and work, right? Okay, cool. Those are the appliers. Who's actually building those applications that are changing the way we learn, play, and work? Well, first up, Meta. Probably the king applier, right? The way that they've used AI to, one, transform their content. So I'm not a social media guy, but I do have Facebook, and I love short form videos. So I look at Facebook Reels all the time, and I'm addicted to this stuff, man. The AI algorithm knows me better than I know myself. It's absolutely crazy. I'll just be honest, like, it knows exactly what I want to watch at what time of day and what video I want to watch after the one before it. It's absurd how good that is. And guess what? Time spent on Facebook, I think, is up like 10% in the past 6 months. Time spent on Instagram, I think, is up like 9 to 10% as well in the past 6 months because of the AI algorithm improvements on the feed. The feeds are just so good these days. Then you got the AI advertising aspect, right? Like Meta is using AI to completely automate the advertising process. They're not there yet, but Zuckerberg does have a vision of, in the future, all you have to do as a company. Let's say I'm selling newsletters, okay? Which I do sell newsletters. Let's say I'm selling investment newsletters, okay? I just go to Facebook and say, hey, Facebook, I want to sell this investment newsletter. Do it. Like, I don't tell them what creative I want. I don't tell them who I want to target. I don't tell them anything. Like right now, I got to tell them all that stuff, and they try to optimize it with AI. In the future, what Zuck wants to build, and I think they will build this very soon, is just an all-in-one end-to-end AI advertising platform. I go to them as a person who sells investment newsletters and say, hey, advertise. And they control everything, AI optimize everything to create the perfect campaign or campaigns for me to get traction. Meta, king applier. Very, very strong applier. That's why the stock has been such a big winner. Meanwhile, you have companies like Spotify. The stock's been a huge winner as well. That's an AI applier. They've been using AI, their DJ AI. I love the DJ. I use the DJ all the time. Plays the right music when I want to hear it. It's great. Don't have to think about it. Duolingo, another great AI applier. They're using AI in their language learning application. Great app. If you haven't used it, try it. Try their Duolingo Max, which is their AI version. Super good. So these are the appliers, right? They're using AI to improve their products and services and making AI powered versions that are just better than their predecessors. And they're seeing huge demand, and those stocks are soaring to 52-week highs and soaring, big amounts, not small amounts here. We're talking big gains. So, yeah, Builders Appliers. Look at a stock. Look at any AI stock through those two lenses and ask yourself the question, hey, is it a builder? Is it part of the supply chain that is contributing to the build out of AI infrastructure? Applier. Is it creating a new AI application that is significantly better than other applications out there that are trying to do the same thing, and which will see a huge increase in demand or growth or adoption? If yes to one of those two questions, then you found your builder and you found your applier. If no, then forget about it, because there's so many good options out there. You don't need to be wasting your time on just mediocre options. Find the best, stick with them.
Wow. Yeah, I mean, just putting on my exponential goggles, if you will, it feels like we're still on a ground floor for a lot of this. Uh, it seems like there's so much more runway left for the infusion of AI into a lot of these things. So that just so much, so much room for opportunity. We're talking about these AI stocks, but I do want to talk about exponential tech stocks currently, or just exponential stocks in general. Just a quick segment. We got a list together here of some stocks, and I just want to go over those with you. I'll get those ticker symbols on the screen for everybody to see. And if you can just work through that with me and our viewers here, Luke.
Yeah, sure. So this segment, folks, we're gonna kind of part of our weekly rundown is we want to show you how all these things we're talking about are translating to exponential gains in the stock market amongst individual stocks. So every single week, we're going to highlight a few stocks that have had exponential moves higher, and talk about, okay, what do they do? Is the growth there? Is it a good stock to buy or sell, etc.? So that's what this segment's all about. So this week, we're going to talk about some of the hottest stocks of the past week that have experienced exponential moves higher. Now, one of them, the first one, is SEZL. The ticker is SEZL. Now, they're one of those BNPL firms, okay? Buy now, pay later. And the stock has been, on a tear. You can pull up the chart for yourself or see it. I think it'll flash on your screen. We'll get it flashed for you. This one is crazy. We were at what? We were at basically $1, split adjusted, $1 back in late 23. Now we're at $100. $1 to that's it's 100x return, folks. Exponential. So up 100x essentially in less than 2 years, and in the past month or so, holy moly, we are up 240% in the past month, from April 4th to May 20th, from about $28.70 to $98.36. That is what we call an exponential move, and it's happening because the company is experiencing exponential growth. When you look at what's going on here, revenues are expected to rise about 62% this year. They're expected to rise more than 20% next year. Operating income is expected to more than double this year, up more than 30% next year. So big growth in the company. There is AI involved in there. They are using AI to analyze a lot of their BNPL transactions for approval and whatnot. A lot of what the other BNPL players are doing as well. But this company just seems to have found some secret sauce that's working really, really well. Technically, it's super overextended, so I'm not sure it's worth chasing in the short term. But when you look at sort of the long-term growth profile and the valuation on it, like I said, this is probably a 20% compound revenue grower with some margin uplift expansion on it, so maybe a 30 to 40% profit grower. And we're still only trading at 27 times forward earnings. That's pretty cheap. That's 27 times forward earnings for what I see is probably a 30 to 40% compounded profit grower. Yeah, that's going to work. That's going to work in the long term. So short term, definitely extended, definitely not worth chasing right here. I think RSI is way in overbought territory. But when I look at 27 times forward for 30 to 40% profit growth with an AI component to it, SEZL is an exponential stock that probably has more exponential moves in it over the next several months. So that's the first one. Now remind me, what's number 2 on our list, Brooke?
Number 2, we have Dave. Ticker symbol.
Dave, one of my favorites. We'll talk about the stock in a moment, but I love the company Dave. Dave is really, really cool. Fintech company. Think SoFi, so like a mobile fintech app, banking app, but geared towards lower income consumers with their secret sauce being this Cash AI engine. So the Cash AI engine is their proprietary AI model that is supposed to be a substitute for credit scores. So we all know that credit scores kind of suck, right? They do suck, but they suck. Credit scores suck, and they especially suck for lower income individuals. They disproportionately disadvantage lower income individuals. If you're super rich and you can load up on credit and have 17,000 credit cards, all with $2,000 on them, and then you pay it down every month, you're gonna have the perfect credit score. Congratulations. If you got a big mortgage and you pay it every month, big car payment, you're gonna have a great credit score. But a lot of people aren't financially able to do those things. And so they can't build their credit score, or it's really hard to build their credit score. So what Dave did is they built their Cash AI engine, which said, hey, you know what? Forget credit scores. We're going to lend to you based on our AI score, on our proprietary AI metrics. So look at things like cash flow and income history and job history and things like that. And they're going to evaluate your credit worthiness based on a different set of factors that are not in your traditional credit score. And this thing is so popular. People are loving it because guess what? It is finally a fair system for applying credit or applying credit worthiness, determining credit worthiness for people that don't make millions of dollars. Yes, win for society. And Dave, glad to see the company is doing really, really well. Revenues are going to grow 34% this year, looking at 18% growth next year, over 15% growth in 27, profit growth of, operating income growth of 230% this year, 27% next year. I mean, it's a big growth company, big growth. And when you look at the chart, it's a big time runaway. Let me pull the chart right now. That stock has been a huge winner. Again, exponential moves on it. Since it bottomed around April 4th, 2024, it's up about 180%, 170% in the last month or so, April 4th to May 20th, from about $70 to nearly $200. And when you zoom out, you see the move that it's made off those 23 lows. So this AI bull market really started in 23. This stock really bottomed right around May of 23. That was right around $5. Now it's at $200. Pretty nice. Pretty big return there on Dave. So big exponential winner. Can it continue? Again, I love the fundamental growth narrative on it. I think it does have a lot of growth runway left. And much like SEZL, it's shockingly cheap. 22 times forward earnings for what, again, I think is a 20-30% compounded profit grower. That's just too cheap. That's far too cheap. So does this one have further to run? Yeah, I think so. Cash AI is legit, and the growth profile's there. The valuation's discounted. The stock has momentum. This is an exponential stock that probably keeps working. What do we have next, Brooke?
Next, we got Sunrun. Ticker symbol RUN.
Sunrun. I'm going to keep this one short, and I would run away from this one. Sunrun's a solar company. Solar energy. They provide, they sell, install, monitor, and maintain battery and solar panels on homeowners' roofs. So residential solar. I think solar's dead. I'm an exponential tech guy, but sometimes one exponential technology kills another exponential technology. And I think that's what's happening in solar. The big use case in solar is that, okay, it was this super efficient, clean energy source. So it's kind of a win-win. It's efficient and it's clean. But you know what's more efficient and more clean? Nuclear energy. Nuclear energy is more efficient and more clean. And the big growth story in energy right now is AI data centers. And a lot of those AI data centers, yes, we can use natural gas to supply them, but the companies running them are Amazon and Microsoft and Alphabet. And these companies are very conscious about the environment. So they want to choose a clean energy source. They could have chosen solar. None of them did. They all chose nuclear. They're all going nuclear. All of big tech is going nuclear. They're choosing nuclear energy, and more nuclear energy. So in the short term, I think the value proposition of solar has just been completely eroded by nuclear fission energy. And then once we get to nuclear fusion, remember there's two types of nuclear energy. There's fission, which is the tearing apart of atoms. Then there's fusion, which is the bringing together of atoms. Fission is the boom boom. Fission is the one that can have, Chernobyl, 3 Mile Island, that stuff, okay? Not so good. That's what the bomb's made of. Fission. That's what we have today. So some people are still wary about it, even though all the data says it's super safe, and it is super safe in my opinion. There's still some hesitancy about, okay, well, there were boom boom accidents in the past, so I'm a little worried. Okay, fair. Fusion, no boom boom. No boom boom in fusion. Just really hard to do. But if we can get nuclear energy, we can get the fusion version that doesn't have boom boom and is even way more efficient, then why in the world are we going to need anything but nuclear fusion? We don't need solar, we don't need wind, we don't need hydrogen, we need nuclear. And so I think the whole long-term value proposition on solar is just completely, it doesn't exist anymore. I don't like it. I don't think there are good investments in the space. Maybe good trades here or there, like Sunrun popped significantly in the last few weeks. But that's more because this tax bill went through and it wasn't as hard on solar as people thought it was going to be. Oh, so it's not as bad as feared. Well, it's still bad. So I say run away from run and run into Dave and SEZL. What's up next?
I gotta say before we move on, I love the technical term boom boom.
What technical term?
Boom boom.
Boom boom. Yeah, boom boom.
Very,
no boom boom. Yes, boom boom.
Right. I'm a no boom boom guy myself.
I'm a no boom boom too. Less boom boom, the better.
Next up, we got Archer Aviation, ticker symbol ACHR.
And gotta love Archer, man. I'm a huge fan of eVTOLs, electric vertical takeoff and landing aircraft, aka flying cars. Because here's the bull thesis. I'll keep it short. Elevator pitch. Short haul transport. We got a lot of options. A ton. We can walk. We can bike. Electric bikes are a huge thing here in Phoenix. I don't know if they are anywhere else, but they're huge here. So we have electric bikes. We have cars. We have buses. We have trains. There's a lot of short haul transportation options. Efficient, affordable, mastered. That stuff's taken care of. Put a bow on it under the tree. Long haul transportation, also very much taken care of. Planes, helicopters, private jets if you got that type of money, right? Like they're ships. Long haul transport, again, put a bow on it, put it under the tree. We got that taken care of. What about mid-haul? What about mid-haul transport? I want to go San Diego to Los Angeles. How am I going to do it? Amtrak, they got an Amtrak there. Maybe, but not really that affordable and not really all that fast. What if I want to go from LA to San Francisco? What if I want to go Miami to Orlando? Austin, Dallas, Houston, San Antonio.
They'll sound like road trips to me.
Road trip, exactly. There's the mid-haul transport, that's a gap in the transportation market. eVTOLs are going to fill that gap. These things, so vision, future. Every city in America, every major metro is going to have a lot of vertiports built. These vertiports are going to be like helipads, but they're just outfitted for these eVTOLs. They're going to be every, 20 miles or so in major metros. So from where you are in your house, it's no more than a 5 to 10 minute drive. Let's say I'm here in Phoenix. Take a 5-minute drive to the local vertiport. Hop in that vertiport. The eVTOL flies me to San Diego, okay? Takes about the same amount of time as an airplane, maybe a little bit longer, but it's a tenth the cost, okay? Then I do the same thing on the way back. Mid-haul transport solved. You do it if you're trying to go from your home to the airport, if you're trying to go from LA to San Diego, Boston to New York to Philadelphia, et cetera, et cetera, et cetera. There's a lot of mediums through which eVTOLs can have a lot of success. And I think they're going to have a lot of success. And Archer is one of two companies in the space that is leading this revolution. Archer, ACHR, and then Joby, JOBY, are the two leaders in the space. Both of them are starting commercial operations for these eVTOL aircrafts. They're not science fiction anymore. They're actually flying these things in America. Not commercially, but they're test flying them. Both of them will start commercial operations this year in the United Arab Emirates, in UAE. They're going to start commercial operations. And in fact, Archer, I think, just won approval to transform the helipad at the Abu Dhabi airport into a vertiport that will allow for these eVTOLs, and all that's going to start later this year. So this science fiction concept is becoming a reality. I think there's a lot of growth potential in the industry. Archer is clearly establishing itself as a leader in the space. And then one of the coolest things is Archer just signed a deal with, and I think it's the Olympic Committee. I don't know who the actual deal was with, but they're going to be the official partner of the 2028 LA Olympics. And what that means is that in 3 years, summer 2028, when we're tuning into the Olympics, we're going to see athletes, VIPs, fans getting transported from venue to venue in these eVTOLs. That's so cool. Because in a city like LA, I've lived in LA, traffic sucks. It's horrible. You put all of these people from the Olympics into that city where traffic just naturally sucks normally, and you put this influx of traffic in there. My God, I would hate to go to those Olympics unless I had access to one of those eVTOLs. Then I would love to go to those Olympics because I could pass over all those freeways and say, hi, it's all the people sitting in traffic, and get from one venue to the next in 5 minutes. That's awesome. That's going to be super cool. That's going to be a watershed moment for this industry. It's going to validate the value add of this technology. And that could be a moment these stocks really, really soar. Before that, though, again, commercial operations in 25, in UAE, 26, they should start in the United States. So, series of upside catalysts here. Archer stock's gone from $6 to $12 in about a month or two. It's off the lows of what was like $2, $3, all the way up to 12. So a 4xer in the past year or so. I think the stock had a lot. This is one of those exponential stocks I think that can keep going exponential. And then I put Joby on everyone's radar as well.
Man, that is so cool. I gotta say, flying cars are almost the epitome of, like, as a kid, what the advances in science are like. It's just reading science magazine is like, oh, we're gonna have flying cars, and just to have it be so tangible, what feels like so soon, that's awesome.
The Jetsons, baby. Welcome to the Jetsons.
Jetsons, exactly. But moving on to the next one, we got Ava Technologies.
Yeah, Ava. Good friend Ava. Ava's an interesting story. Ava is a company that they make LiDAR, the light detection radar type stuff. Okay, so LiDAR is the initial value prop of LiDAR was in self-driving cars because cameras don't see just like human eyes. They don't see very well in cloudy conditions, rainy conditions that, obstruct visibility. And so LiDAR was meant to be a sensor that complemented that so that self-driving cars could see in inclement weather conditions. The Waymos all across the nation and here in Phoenix, they have LiDAR sensors. The Aurora self-driving truck in Texas has LiDAR sensors. Tesla is not going the LiDAR route. There's a big debate between LiDAR versus non-LiDAR. Okay, most of the methods are LiDAR methods for self-driving. In China, all of their self-driving stuff is LiDAR based. So it's become a huge centerpiece of the self-driving revolution. Ava tried to be a part of that, but with a very particular angle of they wanted to supply LiDAR to Apple. Because remember, Apple Car was supposed to be a big thing. Apple Car was like Apple's next big project, and Ava was actually founded by former Apple engineers. So I think the hope there was that, okay, they have that Apple DNA, that Apple connection, that Apple blood. They're going to create the LiDAR for the Apple Car to power autonomy in the Apple Car. But then when Apple they closed shop on that project. And so Ava's kind of pipeline dream of becoming the LiDAR supplier for Apple Car, that died. And so did the stock. It kind of died with it. But they're having a bit of a resurgence lately because, as it turns out, LiDAR sensors are about much more than self-driving cars. Robots need them too. As we get into this world of AI-powered machinery, automation, robotics, stuff like that, these robots need to perceive the environment around them. And a lot of them are going to need LiDAR to do that. Again, for the same reason that a camera-only approach on cars probably won't work, you probably need LiDAR on all of these robots as well, in case it's cloudy or it's dark or whatever it may be, right? You need to improve their vision, the ability to see and interact with the world. So all of a sudden, people are starting to understand, wait, LiDAR has more than one big growth application. There are self-driving cars, huge potential, but there's also, humanoid robots, warehouse robots, automation machinery, all that stuff. All of a sudden, the growth, the TAM here becomes much, much bigger. Ava is pivoting into industrial LiDAR. They're pivoting into supplying LiDAR, not so much for cars, they're still doing that, but more so for industrial applications, warehouse robotics, automated machinery, things like that. And they just won some contracts, and that's breathing some life back into the stock. Okay, that's cool, but I still think it's a wait and see type situation. Like this stock has had so much pain. The growth has just not been there that it's great to see the pivot. And I'm rooting for the company. I really hope they do well. But before kind of pounding the table on it, I want to see more wins in industrial LiDAR as opposed to just one or two. I want to see a handful. Give me a half dozen. Give me a dozen contracts and orders over there. Then we can start talking about you as a robot supplier. If we get to that point, Ava, it could be a massive breakthrough. But for right now, I'm saying, hey, don't throw it in the wastebasket, but don't roll into it either. Let's just watch it. Let's see what it does.
Gotcha. Yeah, that's safe. The industrial thing, just thinking exponentially, that's a ton of scale. So I guess fingers crossed for Ava Technologies. And then on to the last one, hopefully not least, we got Curiosity Stream, ticker symbol CURI.
This one's been a huge winner. It bottomed at just below 50 cents in February of 24, so about a year ago, and now it's at $6, $6.24 as I'm looking at it. A huge rally. That's exponential for sure. Can it continue? I'm going to go with a sun run answer here and say no. I'm not a huge fan of Curiosity Stream. So Curiosity Stream, they're basically like the Netflix for documentaries. Okay, cool story. I don't need it. I don't need it in my life. Netflix has damn good documentaries, okay? I also pay for about a dozen other subscriptions. I don't need another one in my life. All of these apps, like I'm actually seeing, talking about how much time I spend on my Facebook feed. I'm getting all these ads. Maybe this is a sign that I have too many subscriptions, so maybe I'm biased here. I'm getting all these ads about these new apps that cut your subscriptions, right? It's like they run a screen to see how many things you're actually subscribed to, and you're subscribed to way more than you actually thought, and so you reduce them and you save money, whatever, all that stuff. I think we have subscription fatigue in the economy. 100%. I don't think people want more subscriptions. They want less. They want to consolidate. Curiosity Stream, I don't think they have the value proposition to be a winner in that consolidation. Clearly, they're doing something right. The stock is telling me they're doing something right. But long term, asking the question, is this move legit? Can it continue? I just don't see the long-term value proposition of a documentary-specific streaming service in a world where the most popular streaming service, Netflix, has really, 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 really good documentaries, and they pump them out all the time. So, I don't know. I don't see it. I don't think there's a future there. I wouldn't be chasing the stock.
I gotcha. As an optimist, I want to believe that a documentary streaming service is going to keep doing well in a world where attention span is going like this. I'm praying for it. I like to think of myself as a victim. TikTok has taken a lot of hours out of my life. Instagram Reels, same thing. I got it under control, but it has taken a lot out. And I want to take that to something you've mentioned before. I think we talked about it a little bit. It's a phrase called abstinence. It's this trend where people are ditching their smartphones, maybe even buying a brick phone, as I like to call them, the ones with nothing on them. Maybe you got Snake on there. And thinking about that whole thing, it kind of runs counter to everything we've been talking about. It's anti-exponential. It's anti-technology. I want you to expand on that for the audience, for us. This idea of abstinence.
Yeah, yeah, abstinence. I'm a tech futurist. I believe in technology, and I pray to God that abstinence becomes a huge thing.
Yeah.
I do. Living life through this, not great for this. Okay? And not great for this, not great for talking, not great for conversing, not great for just being a human, like a real human. I love abstinence. I think it's a trend that it is getting a lot of momentum, and I hope it gains a lot more momentum because I don't want my kids living in a world where I mean, I look at my kids are under 5. I look at teenagers these days, and it's like, bro, get your head up. Like, the tech neck, right? The tech neck,
Neck. Yeah.
like get your head up, chin up, talk to me. Like let's have a conversation. I go and play pickup basketball. I'm looking for a good pickup basketball run here in Phoenix. I go and play pickup basketball at some of these gyms and some of these high school kids, and it's like their social skills are like sub-zero. It's like, was I that awkward as a teenager too, or is this like a diagnosis of the generation? I don't know. I mean, I think technology isn't great for us in that way, but I want to make abundantly clear. Again, I'm saying this as a tech futurist, as a tech optimist. Abstinence is not anti-tech. Abstinence is anti a very specific type of tech that steals your attention and takes you away from the real world. What are these designed to do? Capture your attention and take you away from the real world. Because the more time you spend on this little thingy-majiggy, the more money they all make, whether it's Apple or the apps on the phone, right? Meta, Spotify, Netflix, Duolingo. That's what this is all about. Attention, grabbing your attention. That tech sucks. But there's a different type of tech. There's a different type of technology that can enhance your real world experience, not take your time away from you, but give you your time back and make your real world experiences better, allow you to reclaim your presence. And I wish I had a pair to show you, but I'm talking about AI glasses, okay? I'm talking about AI wearables, smart. I got a dumb watch on right now, but a smart watch. I'm talking about that. There you go. I'm talking about that stuff, okay? Let me ask you a question, bro. What do you use your Apple Watch for?
I use it for mostly health stuff, heart rate, tracking my steps, specifically, heart rate variability. That's something I've learned about recently. It's a good metric of your overall stress levels, and it's, right there in my Apple Watch.
Exactly. Exactly. That's what people use their Apple Watches for, okay? They use them mostly, I would say, for health. So what is a result of you using your Apple Watch? You're more concerned about your health and you do
Right.
things that are better for your health. My wife has an Apple Watch. Step counting. It's all about step counting, okay? We got to get those steps. I don't know what the number is, if it's 7,000 or 10,000, I don't know, but we got to hit those. And if she hasn't hit those, it could be 10 p.m. at night and she hasn't hit those, she's hopping on the treadmill to hit those, okay? It's all about the steps. For others, it's all about, like you said, the heart rate monitor. Some people love these Aura rings. This
Yeah.
is a regular, boring old wedding ring. But people have those Aura rings, right, that track your sleep and the cycles and stuff like that. I have a sleep number bed that tracks, also circadian and things like that, right? Okay. This is tech that helps you out in life. This is the tech we need to move towards and away from these things. Okay. Tech that enhances our real world experiences and makes us healthier humans. And I think AI glasses are a huge part of that. They've been flops after flops after flops. I get that. But what Meta's cooking up over there with those Orion glasses, I think it's going to be huge. I think that's going to be absolutely huge. I mean, imagine a world where we're no longer on this. Throw this away. And I got my glasses on. And it's holographic projections. And I can turn it on and off as holographic projections with, the click of my finger or whatever. That's what they're trying to do. They're trying to do this synaptic stuff where it's like stuff you do down here with your fingers that actually controls the glasses. I don't know how it works. That's a science that I don't understand. But they're working on it. I think they're going to get it. Imagine that world, okay? Now all of a sudden I'm using the glasses to enhance my real world experience. My neck's up. I'm not tech necking it. My neck's up. I'm looking. I'm
Still
seeing the
looking.
world. Okay. Here's a restaurant I want to eat at. Quickly. What are the Yelp reviews? Okay, boom. 30 seconds. I'm in, I'm out, and I'm back. It's tech that's giving me my time back, right? It takes me 30 seconds to do it, boom, and I'm back. I'm back in the real world. I go into the restaurant, I look at the menu, okay, give me some suggestions based on what I like. Because hopefully these things have their own AI personal assistants built into them that knows me. Oh, Luke, you're gonna like the chimichanga, whatever, right? Like it's gonna know me. I love chimichangas. Also, the California burritos have not found a good place in Phoenix for California burritos. Shout out San Diego, you made the best California burritos. Just putting that out there. In any event, I love this type of tech. And
Yeah.
AI is the driver or the value unlock of this type of tech. The reason these glasses didn't work is because they weren't freaking useful, man. They weren't that useful. I couldn't put on these glasses, look at something, and get an immediate context for that thing or description of that thing. Now, or with I definitely can. Something I love to do, like a personal hobby of mine, landscaping, like gardening type stuff. Kind of weird, very therapeutic, okay? Love doing it. Sometimes I'll look at a plant and be like, dang, does this need more water? Does this need less water? Like, what's going on here? I would
Right.
love to have glasses where I just look at it and boom, it knows takes a picture of it basically, knows exactly what to do, and then it tells me, okay, you're gonna want to water it more, you're gonna water it less, you're gonna want to get it more sunlight, whatever it may be, right? Like, so many applications, so many of them are small, yet so many of them matter to people. And that's what I think that's what the abstinence trend is all about. It's not anti-tech. It's about getting away from tech that takes your time and steals your attention and shifting towards tech that gives you back your time, allows you to reclaim your presence in the real world. And I think AI, oddly enough, is going to allow us to do that. So I'm hugely bullish on AI wearables. I'm hugely bullish on AI glasses. I think Meta is the leader there right now. Apple is reportedly working on something, but I think Meta, again, that Orion project, really bullish on Meta stock. We brought it up quite a bit this week.
Yeah.
I think that Orion project is going to be big time.
Awesome insight. I got to add, speaking of wearables, a buddy of mine bought, I can't remember the brand, but they are smart glasses. We met up one day and he showed them to me. He took them out of the case, the chargeable case, and they just look like regular glasses. They had his prescription in them, and he was just showing me the stuff. He let me wear them, and it was an insane experience.
Was it
And I
the
think
Meta Ray-Bans?
the Ray-Ban, correct? Yep, the Meta Ray-Bans. They
Right.
were nuts, and I think the coolest thing for me is just as a person who indulges in cameras. He was showing me videos he took on the Ray-Bans, and they were super crispy. It looked like they came from an iPhone. And the best part of that is he just had a daughter, so he was showing me the videos of his daughter. He was just wearing glasses and recording the video. It wasn't that weird partition between him and the other person with holding the phone up. It was just
You remember spectacles?
yeah, the big
Yeah.
the blocky ones. Yeah, yeah,
Yeah, Snap is a bad company. It's not a good stock. It's not a good stock to buy. But I think Evan Spiegel is a visionary, and I do think he had some great ideas. And I think spectacles are before their time. But yes, this idea that your eyes are your camera, not
exactly.
this. Your eyes are your camera. It's
Yeah,
much more natural. Okay. That's again tech that allows you to reclaim presence. Doesn't take you away because when you're recording with your glasses, I mean, okay. Funniest thing ever.
yeah.
LeBron, when he scored that bucket, like a fadeaway jump shot from the left elbow, and it was when he broke the all-time scoring record. There was a picture that came out shortly thereafter. And it was a picture of LeBron shooting that fadeaway jumper, and it had the background of all the fans. And every single one of them was like this. Nobody was actually watching the moment. They were watching the moment through this. The only person that was just sitting there and then taking in the moment and looked very happy doing it was Phil Knight, the founder of Nike. He was sitting there courtside, just kind of just really basking in the moment. Meanwhile,
Yeah,
everybody else was looking at it through a recording device. That's not life.
It's
What is
not.
life though is imagine we're all in there. We got these glasses on. It's still going to record, but we're still watching it with our eyes. Again, it's just all about reclaiming presence. Okay, let tech allow us to reclaim our presence, not lose our presence. That's what this is all about. That's what Appstinence is all about. That's why I'm hugely bullish on AI glasses. Meta Ray-Bans, that's the now. Orion, that's the future. Both of them are Meta. Yet another reason to buy and hold Meta stock. So there you go.
Awesome. I had a great time, Luke. I learned a lot. This is our first podcast, hopefully one of many. Is there anything you want to close this out with? Anything you want to tell our viewers? Anything you want them to be looking forward to next week for, the months to come?
Outside of the fact that I love this stuff. I absolutely love understanding technology and exponential trends and how they're infiltrating all aspects of our lives. I think it's the most fascinating thing in the world. I don't think I have a job because I do what I love, and that's this. And so I could talk about this for hours and hours and hours on end, and I could not be more excited that I now have a place to where we can discuss these ideas through this podcast. So I am enthused beyond belief to be back on YouTube and to be back doing this, talking about these things, and I am very much excited for what the future holds with this Being Exponential podcast. Brooke, it's great doing this with you, and I'm really looking forward to the future.
Likewise, man. Likewise. And that's Being Exponential. We'll see all of you next week.